So it's currently Wednesday, and I'll be doing the review for this past week, which currently is Wednesday, and I'll be doing the past week, which was week 3 of April, from 15 to 19, as a task that was delayed because of these last days and weeks that are not going on my way, the way that I would like them to be going. So I'll be doing a quick review on it, not too on deep, because this was the weekly candlestick after the week 2 big candlestick, which I think I reviewed and recap it on Monday, if I'm not sure. So this Monday of this week, I recap this week, and if I go into the YouTube channel, I think yes, right here, and now I'll be doing the recap from this past week. I'm going to mention this study that I made on Thursday, which was a notion. It was a detailed study of a range, basically a 2022 ICT mentorship model, and I'll be talking about basically the main point of this recap of this week is going to be studying this idea, this like notes that I made, and I'm going to go deeper and explain those better. Followed then by the normal recap of the week where I talk about the TXT of the weekly candle, what happened, what did not happen, and so on, so on, so on. So, first thing is going to move or it's likely to stay quiet news. So, based on news, what can I say? I can see Monday with 8:30 USD news. I can see Tuesday with I can see red news and also CPI on GBP. I can see not a lot, but I can see news. Now, even though that there are news, especially in every single day from Monday, Tuesday, let me just put this view. From Monday, Tuesday, Wednesday, Thursday, and Friday, there is news in every single day. So that's a good sign. We are actually following after a week to big range, not like a small candlestick, like a big range like this one. This one was 300 and this one was 200 pips of movement. So it's no joke. And if uh, someday, like you have a Tuesday big range, you should never engage in the next day. So in this case, same thing. We have a big week candlestick on the previous week, so there is no need to try to find a setup, especially when there's a big candlestick. It was L-side pull, so price is not now more likely to accumulate because after the expansion, always comes an accumulation in this case, or accumulation, retracement, or reversal. Many times it comes an accumulation because it's an I time frame move. Look at this. We had this expression from this was the 2023 eye of the year, 2023 eye of the year, low of the year as well, and we can see that after making the low of the year, prices are consolidated. Yeah, so here we have the eye of the year made reversed. After this reversal, expanding lower, which can be an dealing range retracement, right? Not because this count is not reached yet. This was then followed by price, uh, accumulating, having some time distortion before then going in the desired direction. So what can I say in the weekly chart is that right now everyone is looking for sells because of this potential breakout, and I would be interested in buying. Of course, I'm talking this on hindsight, and I know because I watch the charts, not like watch, but when I'm studying and you open trading view, like the replay tool isn't toggled on yet, so you see what the candlesticks did on past days. So I can yes, price on this current week of week 4 has been trading higher and higher, going to the previous week high, and so far it's on into the range of the week 2 candlestick. It's digging up into that candlestick. But focusing on the uh, focusing on the news, we can see that is it going to move or going to stay quiet? Do nothing. I believe that it's going to move. It has the news, It's not those CPI, FOMC, and FP type of weekly candle, but it has some type of news. They aren't the ones that I like to see, but they are news, so you can actually trade and can predict. Do I think it's worth it to trade a candlestick after a big as large range from week two? I do not think so. So this will be like a no for me, especially after the previous candlestick. Everyone is looking to short. Everyone wants to buy this. Everyone wants to buy every single eye because they want to chase, right? Lower prices. Now we have to chase more, chase more, chase more. So that's basically why I do not believe, and I do not think that it would be a good idea to try to trade this candlestick from this week three. So these are the news. In what days are price more likely to move? It's kind of 50-50 because yeah, we have a very uh, not equilibrated, but a very midterm of news because every single day is news and every single day it's red news. It's not those really red news with NFP, CPI, and so on. It has CPI, but it's GBP CPI. It's not that big of a problem, right? It's the USD CPI that moves a lot the markets. But as I was saying, it's like on Paint, you know. Let me open Paint, Visual Paint. Like, let's put this bigger. You have like this midterm red, then the really dark red, and then a more let's let's call it uh, less darker red, which should be a more lighter red. I would say that for this day, for this week we were on this place right here. Yes, there were red news, but they weren't those type of news that usually places on this spectrum, you know? Like it's a spectrum right here, and there are these red news and these red news. And for this week, the red news were on this less impact red news. So that would be also, and they are very like well distributed. It's 8:30 to late news on PM session, early AM session, then New York session, lunch session, sorry, New York, then then the usual London news on GBP. So yes, there was movement, but it isn't the movement that you want to be part of because we had an expansion reversal, and after the reversal, we can either retrace to then continue to expand, we can accumulate, and those are the I think the only two that happens after the reversal, if I'm not wrong, because price does not expand after the reversal. Don't quote me on this. So that was basically it. I'm going to give you the next point is in what days is price more likely to have a lot of liquidity. Based on this, I will tell you Wednesday because of the CPI. It's the only higher important news. It's not USD CPI, but on all of these, it's like Tuesday Fed share Powell speak at 1:15, so late PM session on Tuesday. Then Wednesday, I think it will be a good movement. And unemployment claims also moves a lot to market. So I would put myself on a Tuesday, Wednesday, and Thursday for trading. Monday I could also trade because Monday with news indicates that the expansion is likely to happen, but this has to be coupled with Friday accumulation. So if Friday accumulates and then we have Monday news, red news, then Monday is more likely to expand. Now going, I think, into the second point, which is where's weekly candlestick likely to go? At this point, you do not know. Yes, lower prices might be probable, but my high time frame drawn liquidity was this, a week one, this Q1 low. So if you go to the 3 month, we can see that the 3 month low was taken, and there was a clear drawn liquidity, and you can see that price now reach a discount of this current candlestick, so it now may see something happening, but I don't want to go too deep into the I time frames. but we can see this being my target as this February low being the Q1 from 2024 low, and that was my objective since price was appear right around here, because we had this then this retracement into here, price traded lower, created that fake end and shoulders. So my narrative hasn't been changed because I was looking at GBP trading into this high time frame, this range low. After range high, expansion, now this is viewed as a potential order block, then go lower. So the whole idea was that I was looking for sales until GBP had traded into these lows, and then we can see the price trading into this big fair value gap. So this big discount also seen on this big discount as well from year to year Tuesday, yeah, from this low, this high. Now we are on discount once again. That was my whole idea. That was my whole uh, bias, but notice that it was traded to on week two. So on week two, my high time frame draw liquidity was taken. And now I just want to watch and see. Is it going to accumulate and then trade higher? Is it going to accumulate and then give another leg lower? What's going to do next? And so on, so on. So I was not forcing, neither trying to impose my will after my item frame down to is taken. So that's also a reason why a valid point for saying that this week is not worth it trading week for EU. It can possibly be for Nasdaq, SMPX, whatever, but for EU it wasn't worth it. The mental state in some sense. So everything is telling us to not trade it. There is no idea. You are more likely to expect a range. So engage on Thursday and Friday, all into Monday and Tuesday of next week, because it's after an expansion move. Now going to the candlestick, I want to talk then about this study right here, which is a range study that I mentioned about our price made the low of the week and then high of the week. And then this is the 2022 model. We have buy side, key level, fair value gap, then price trade lower into this discount sell side pool. And that's the whole idea of accumulation, expansion, retracement, right? You have accumulation and expansion above the accumulation. And now, after an expansion is done, only two things can happen, which is either price is going to create expansion and creating now an retracement inception, so retracement start. It ends the expansion, it starts retracement, or it ends the expansion and starts the reversal. So that's why you always want to take a partial from this low to this high. There's 50% right around here, and you want to see discount levels to take a partial, because if you sell this expecting this low to be taken, like I was expecting, you can then be fooled, and this, instead of being the expansion reversal starting point, change instead of delivery. This is an expansion retracement to go into a discount, then continue higher. So that's the idea that ICT talks about, taking a partial off at 75% of the expansion range, because either that expansion range is going to be categorized as a dealing range, or it's going to be tiny pen. No. Oh, what's it called? Epic pen. So it's either going to be. I'm going to make you a quick drawing. Let's just open the Epic pen. Okay, let's put it right here. There's no need for bins. So you have accumulation and then expansion, right? This is completely better. You have this expansion, right? Only two things happen after an expansion, right? This is either like a displacement swing, and if it's a displacement swing, then you expect retracement to recontinue on the upside, or let's try to do the same drawing. If this is an expansion swing and this is not going to be a retracement swing, so there's something here that indicate that it's which is higher in the hierarchy or dominant above this current price action, Then it's going to create this fake OT to then go lower. And in this case, we have the reversal, right? This is a displacement swing, and the OTE is valid. This is a manipulation swing slash Judas swing, and the OTE is not valid, and it's going to fail, right? That's the whole idea of this, is to determine when OT is going to work and when it's going to fail. That's simply it. Simply. So we have the accumulation, right? Monday and Tuesday, that type of accumulation. Low made, big expansion on the upside, leaving this accumulation trading into a key level. The 1 day fair value gap, everything. I know that this is kind of out of context because I didn't talk about this, but I think that you guys can go into your charts and study it. And then what is going to happen next? You can short the retracement. You can, after an expansion ends, you can always do the opposite. So if this expansion is a bullish expansion, you can always short it, but you have to be careful about it. Is it going to be a reversal? And do I hold until the low that made the high? Or do I just hold until there's a low time frame liquidity pool, a low time frame fair value gap, something on low time frame that is on discount to offset my position before going higher? And this is in this case, this I'm going to study and I'm going to show you that in this case, this was a displacement swing to then an OTE that was validated to then continue on the upside. And it wasn't a manipulation swing and not a Judas swing. And the OTE was indeed valid, and I would be wrong on this idea. So I'm going to show you, I think it's before the print. I'm talking about the CB, 3-day chart. There's this dealing range from the Thursday low of the day to the Wednesday high of the day. It's a mistake here. As dominant one, the one that I will be looking if in tomorrow, if tomorrow I wanted to see lower prices, and if instead I expected this Thursday high to be a reversal for lower prices. And there's this low time frame slash submissive range, which sometimes is the dominant, if indeed, in this case, the low of the week slash low of the day is in. So this low of the week, low of the day, low of the week slash low of the day is in. Change in set of delivery has already happened for the weekly candlestick. And now this downside movement is indeed a retracement. So this downside movement is indeed, instead of being the reversal to then go to the low, it's the reversal, it's the retracement to go to a discount to then continue on the upside. This will be a good place to offset a sell and to buy into the sell, meaning that now this place right here will be a good place to offset a sell, right? If I sold this retracement slash reversal high, then I want to sell, then I want to buy back my position on the retracement ending point or on the reversal ending point, right? So the entry at Thursday, so the entry, if this is a retracement, now your entry right here. So let's get the pen tool again. I should not have. So if you sell right here, aiming for from this, right? You shorted right here. You have stop loss. I know the where you have like a 3R for our position from here to here. You shorted the retracement start slash reversal start. We don't know yet, right? But you can analyze it, and then we can offset either at here, which would be considered the retracement end because it's on discount, or here, which will now be considered the reversal end. Right, but I'm going to put a line to differentiate. It's a reversal end, retracement end. So these are the places for you to offset this short. If you offset right here, there's no need to buy back. You just have to wait because price after reversal usually consolidated. But if you are in a retracement move, and if this is indeed the retracement ending point, then you want to buy back this because after the retracement end comes the expansion, the second expansion. So I'm going to put two expansion starting points, and you want to buy back right here because price is going now likely to move into where? Into the retracement start, right? So if this is confused, if it is confusing, not confused, right here, right here. If this is confusing, I'm not going to show you the charts. And we can see on the 4 hour what I want to talk about. If I go out of the exit bar, we can see that actually price retraced into a discount at this low time frame range low, at this submissive range low, which was dominant. And instead, the reversal didn't happen, but the retracement happened. 75% of the range, right? If you entered right here, stop loss of 10 pips right here, you could have a very good trade, 4 hour trade. And then price reversed. So accumulation, expansion start, expansion end, expansion end. So EE. And an expansion end creates two things: either a reversal, retracement start, or reversal reversal start. So either a retracement start or reversal start. If it's a retracement start, then when it comes to the reversal end, you want to buy it back because you know that price is 99% sure to go back into the expansion end, right? Because that's usually what a uptrend is or a buy model is, right? You have this low prices and then you want to buy back this pullback right here to then go back into the expansion end. So expansion start, expansion end. Then you want to buy back the pullback, right? Because that's the whole idea of trading pullbacks. Uh, what? Why it's selecting everything? Nope, this one. So that's basically, and that is the 2022 model. Give me 1 second. So that's basically it. And then you engage on the retracement or reversal starting point. If it's a reversal, you do not you close on the expansion starting point, and that's your whole trade idea. From expansion start, expansion end, reversal start to reversal end at this low. It can go lower if it's a reversal. It can go lower, but I think it's a good bread and butter setup to close at the expansion start. But if it's a retracement start, you have to be careful because you know that after reversal, retracement, it always comes the second leg. Like right, usually OTE pull back to then continue on same direction. And indeed that happened, and you can see that this week we had price continue on the upside to the expansion end, and that's the whole idea. Same thing right here, right? Big expansion on the upside, high taken, low time frame share instead of delivery right here, lower prices now. Now either this fair value gap is validated as an OTE to price continue on the upside, so this is another expansion, retracement expansion, or this is an expansion to then reversal. Price now reversed and now is going to retrace to then continue on the downside. So now only two things can happen, which is either this retracement then continue on the upside, or this is indeed the reversal starting point and the price is now going to continue on the downside. So I believe that's everything for this lesson. That's the whole 2022 model on my eyes. Doing a weekly like recap very rapidly. Monday trading lower, following this Friday big down close candle. Tuesday making the low of the day and low of the week with this kind of reversal candlestick. Followed by Wednesday bullish trending candlestick, right? Expansion, trending, expansion. Followed by this retracement on Thursday at this fair value gap, trading lower. Friday opens and continues the Thursday retracement. So retracement start, retracement ends, and now on this week price has been trading higher and higher. I can say that this 1 day fair value gap as a 12-hour fair value gap on the 1 day being the CBI, but here being the Friday candlestick. So this is Friday first half and Friday second half. Also this 8 hour candlestick with this intermittent MI broken and closed above. Engineer this retracement before another leg lower this week. And we have like this 4 hour fair value gap right here above this intermittent MI, which was the expansion swing on Monday. And then on the 1 hour we have this fair value gap on the premium side of the fair value gap with this range idea, range high, range low. This range low was broken and used as a retest and continue into the discount of the current dealing range slash expansion range in this case, because it's not the manipulation swing. That's basically it. We made the low of the day on 13 on Tuesday at that news hour, and then we made the high of the day at London on Thursday at 2 a.m. at this key level with this range idea with Asia range equal lows. And if you go lower, you could have a very good win, like 2 hour possible trade. And we can see price that after this big ass expansion is now consolidated. And by the way, shape or form that we are creating this sell side, I'm I'm aware that this can be a possible retracement, but I believe that price is going to first continue higher a little bit more. I believe so, because we are actually yet in a discount. So yeah, that's the recap for the past week. Not that deep, but yeah, I think that talking about this 2022 model, it's very good. Not one thing that I want to note to you to see is like note the fake OTE, so the valid after the change state of delivery was made. Even it's a change from expansion to retracement. We can see that then bullish OTEs were fake OTEs, you know. Then go into here, price went into here and lower into this fair value gap and into this rejection block. Notice that the 15-minute order block, like this order block right here, is this 1 hour opening price, which is also this weak entry on the 1 hour, 4 hour candlestick on Thursday. That's basically it. Hope you have a great week. Yeah.